Good evening, ladies and gentlemen. Welcome to Q1 FY23 earnings conference call of Easy Trip Planners Limited. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Petti, Co-founder and Executive Director of Easy Trip Planners Limited. Thank you, and over to you, sir.
Thank you, moderator. Good evening, everyone. My name is Prashant Petti, co-founder of Easy Trip. I hope that all your families are in safe and healthy state. On behalf of Easy Trip, I extend a warm welcome to all of you for Q1 of FY23 financial results discussion call. Today on the call, I am joined by Mr. Nishant Petti, co-founder and CEO, Mr. Ashish Bansal, Chief Financial Officer, and Ms. Priyanka Tiwari, Company Secretary and CCO. I hope everyone has had an opportunity to go through our investor deck and press release that we have uploaded on exchanges and on company's website. Before starting with our quarterly discussion, I would like to inform everyone that this year Easy Trip has commemorated its 14th anniversary, and this milestone was a testament of our customer loyalty that this company has received over the period of years. Over the last 14 years, Easy Trip has grown exponentially to become second largest OTA in the country and on the way of becoming one of the largest travel tech organizations globally. During the quarter, we continue to focus on investing in new business segments, make new acquisitions, and expand overseas to start air ticketing businesses. I'm pleased to announce that with an intent to operate in all three activities, which is domestic, outbound, and hotels, this company has set up a wholly owned subsidiary, Easy Trip New Zealand Limited, in New Zealand. With this, the EMT will capture international air ticketing and hotel segment business and strengthen its position as a global travel and tourism company. Also, we have witnessed remarkable performance in our first ever corporate office in Dubai. With the aim to increase our penetration across dynamic international travel markets, the company has reported an astonishing performance from Middle East office. In Q1 of FY23, the GMV reported from Middle East office stood at 7 crores. From this Middle East operation, we started with April month GMV of 84 lakhs, which jumped to 1.2 crores in May. And in the third month of June, we saw GMV cross 5 crores. This signifies that the company has successfully managed to get its foothold in Middle East by providing hassle-free booking experiences and increase its penetration in dynamic international travel markets. With the constant change in rules and current travel uncertainties across the world, we continue to create localized travel search engines for each global subsidiary. With our various initiatives to attract customers and drive growth, which includes full refund medical policy, special airfare discounts on waitlisted train tickets, partnership with SpiceJet Holidays, exclusive deals with Flybig, etc., and through partnerships and agreements with tourism boards and other brands, Easy Trip is paving its path towards a strong recovery for the industry and ensuring the current pent-up demand is utilized efficiently by engaging in operational and performance excellences and winning at the economies at large. With new avenues of growth from non-air segments and the company's continued focus on financial and operational efficiency, the company will focus on continuing to generate long-term sustainable value for customers, partners, and investors. We believe that the best time for the travel and tourism industry in India is ahead, as we witness a rapid increase in demand across business segments. With the emergence of new airports and new airlines, OTAs are being preferred more compared to the direct captive or the offline travel agents. As we have mentioned in the previous call, that COVID has positively impacted OTAs, with pandemic forcing people to book online rather than go to travel agents offline. We expect EaseMyTrip to post strong gross booking revenues growth over the coming quarters, supported by airline operating at full capacity, starts of the international flights, and increase in airfare. Let me speak about our performance and highlights for the quarter. We had a remarkable Q1 FY23 results, with profit jumping by 125% to 33.7 crores against the net profit of 14.9 crores in the corresponding quarter last year. For the Q1 of FY23, gross booking revenue stood at 1,663 crores, generating strong and sustainable growth for its stakeholders. Well, on annualized basis, with the current quarter's run rate, we can expect our GBR, gross booking revenue, to touch around 7,000 crores for FY23. In the year Q1 FY23, our air segment net of cancellations grew by 212% on YOY basis. We have been able to sell 22.4 lakh air segments booking in Q1 of FY23. We have witnessed strong demand, and with our constant current customer engagement, customer acquisition, and focused marketing initiatives, we have been able to inch up our market in air segment considerably. The hotel night stood on consolidation level has seen a jump of 409% to around 0.71 lakh in Q1 of FY23 as compared to 0.14 lakh in Q1 of FY22. We are confident of future growth in this segment with our competitive pricing and wide offering across the hotels. Our train, bus, and other club services together grew by 132% in Q1 of FY23 as compared to the same quarter last year. Given the recovery in travel and tourism sector, it has enabled high growth in bookings in trains and bus segments. Adjusted revenue for Q1 of FY23 stood at 132 crores, up by 169% against 49 crores in Q1 of FY22. EBITDA for Q1 of FY23 stood at 45 crores as compared to 21 crores for Q1 of FY22. Again, up by 114% on YOY basis. And profit after tax for Q1 of FY23 stood at 34 crores as compared to 15 crores for Q1 of FY22, again up by 125% on YOY basis. With this, I open up the floor for discussion. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star
markets, I'm sure you would have studied them. Do they still provide the same kind of profitability dynamics that India does? How do you see your growth over the next maybe year or two, looking at other markets as well? Or do you think the growth will be dilutive to margins?
So currently, we are, of course, contemplating the reason why we entered Middle East market is that we are able to do business at positive run rate. For the other markets as well, we are working, we are contemplating. To provide the exact nature of profitability is going to be tough at this particular time. However, as a company, we stand by being a PBT-driven company rather than the vanity GBR-driven company. So you can expect the company to do whatever business we to do at profitable basis. So this is the endeavor of the company, and we look forward to expand wherever we find more low-hanging fruit rather than the tougher business. So in Middle East, we found business to be slightly more conducive, and that is why we have started that business first. And now we are planning to expand in the other geography. But given the nature of the company, which is PBT-driven company, we believe that we will continue to grow our business profitably.
And in terms of scaling more, both in India and elsewhere, any other kind of expenses, on the past, I think you've spoken about technology costs or other things. Do you expect any disproportionate change over there? You might have to invest in something new or, get people to kind of connect with more networks, more agents, more systems, and which may have different technology. So do you anticipate any change over there?
We do not anticipate a huge change in cost structures, specifically given from technological perspective. In terms of hiring people, there might be some costs, but those are not disproportionate again. They will be proportionate to the business which that particular country and geography is bringing. Most of the cost structure will continue to be born out of India. Only few people would need to be added in each geography. So I do not see any huge capex requirement, or even for that matter, huge opex requirement for the company to grow in the other parts of the world. Whatever expenses related to marketing, sales will happen, they will happen in proportionate to the GBR which those countries are bringing in.
Okay, so I think in the past you had mentioned that largely around the .NET platform, etc. You expect them to be adequate for you as you scale up, for the next 1 or 2 years as well.
That is correct.
Okay, thank you, and congrats for a good set of numbers.
Thank you.
Thank you. The next question is from the line of Parag D from JM Financial. Please go ahead. Parag, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Vaidik Bafna from Monarch Networth Capital. Please go ahead.
Yes, so congratulations on the good set of numbers. I just had a question regarding the revenue split between international airline travel and domestic airline travel. So what would be those in the percentage form?
Ashiji?
The revenue mix between the domestic and it is significantly increased in this quarter as compared to previous one, and I think around 30% of the air flight revenue we are getting from the international.
Sorry, I couldn't hear you. Can you just repeat?
We are getting 30% volume from international business in this quarter.
30%?
Near about 30% in GBR term.
Okay. Yes, and the next question is on the payment gateway charges side. I can see that the payment gateway charges has increased a lot. If you compare it QOQ in Q4 22, it was 12.2% of sales, whereas in Q3 FY22 it was 10% of sales, and this quarter it is 13.7% of sales. So any reason behind this?
Well, payment gateway charges should be looked as a percentage of GBR, and as a percentage of GBR, they are actually quite standard. They're varying anywhere between 0.6 to 0.7%, not as a scale, because you pay payment gateway charges at the total transaction level.
And also it's the customer choice whether they are paying through credit card, UPI, debit card. So sometimes it's vary.
Overall, on the overall basis,
Overall basis,
it is pretty much the same. In the last quarter, it was around at 0.6%, and this time it's somewhere around 0.7%. So I do not see any significant change as a percentage of GDR.
Okay, so that's it from my side. Thank you.
Thank you. The next question is from the line of Jins Varghese from Tavsaya Capital. Please go ahead.
Yeah. Hi, Prashant. What would be the take rate in the international business?
So those will be in line. I do not see a significant change in the take rates for domestic and international. What happens is that at the ticket level, since the amount is bigger, we are able to make much more. But at the overall gross level, I do not see take rates to be much different, except that whenever there's a business class booking, and there are more business class bookings in international travel, we are able to make better margins.
Okay. And which geographies are largely driving this international business? I mean, can you please elucidate on that?
So right now, as the borders have very recently opened up, but not all the flights have started. The borders actually opened up on 27th of March, if you remember correctly. The most of the flights currently are in the vicinities of Dubai, Singapore, and some other destinations. So right now, it has not come back to the standard numbers which we have seen in the past. However, we believe that the international segments, and the other thing which has happened is that there has been a huge delay in visa process for the long haul destination specifically. So I believe that a lot of teething issues are happening post-pandemic, which will be sorted out very soon. And we will be able to see the normalized version of air ticketing on international basis as before.
And regarding this hotel segment, how is the recent EBITDA profile for hotel? I mean, in terms of unit economics, is it deteriorating or improving? And what is the outlook going forward?
So as I mentioned in my previous calls, our endeavor is to grow our hotel business at a break-even pace, and that is what we are focused on. And the results are also in the showing. Our hotel segment, hotel bookings have gone up quite dramatically compared to the last quarter and also compared to the last year of the same quarter. See, at EaseMyTrip, we have also been able to increase our visitors dramatically. If I could share, in January month, around 5.5 million total visits happened on EaseMyTrip on our desktop, mobile web, and apps put together. And in June, that number was somewhere around 7.5 million for desktop, mobile web, and application put together. So our constant focus is to get more visitors on our website and then convert them by selling them various cross-selling activities. Like, most of the people are coming for flights, but our endeavor is to sell them hotels, bus, train, and other services. And that is what our focus is. But the focus is definitely not to grow that business profitably, but at break-even pace.
Okay. And regarding this recent acquisitions of hotel, I mean, how is that going on? I mean,
so the acquisition of 3 hotels is doing pretty well for the company. They have also been given very strong targets, and they are able to meet those targets. The company is running profitably. the backend will continue to operate out of India. However, wherever there is a language barrier, we may have to set up a small call center. For example, in Dubai, we have set up a call center for Arabic-speaking people over there. So wherever there is no language barrier, most of the operations will continue to exist from India. But wherever there is a requirement, we will have to work according to the nature of those countries.
Got it. Thank you, Mr. Prashant, and congratulations and all the best for your future.
Thank you. The next question is from the line of Madhuchanda Dey from MC Pro. Please go ahead.
Hi, congratulations on very strong result. I have 3 questions. The first one is number related, and the other 2 are a little long term. So my question is, if I look at the segmental results, although hotel is very, very small at this stage, but the segmental margin is a tad lower than your air ticketing business. So as we are moving into newer geographies, which is international, and into newer segments like hotel, then buses, etc., what do you think would be the trajectory for the margins? Do you think we will settle a percentage or 2% lower than the current level, or do you think that in the initial stages, margin could take a bigger hit?
So Madhu, basically the idea to grow our hotel and non-air businesses right now is to grow at break-even speed. We don't wish to make money, while it is already known that at EasyMart we get it at the gross level, we make around 12 to 15% on hotel booking. But then we are giving back to the consumers in the format of discount, and that is why the hotel business is at break-even. The endeavor is to continue to grow at break-even for a certain amount of time till that number becomes substantial. And then thereafter, we will consider making some money out of it. However, at the hypothetical level, the margins which we can make on hotels could be higher than the air ticketing margins, because the gross margin itself is higher at the hotel business. So there is the business margins can shift dramatically in hotel business, depending on where do we want to start to make some money out of it. Right now, the endeavor is to grow that business and not to make money out of it. That's the call which company has taken, and in the due course of time, you will get to see of how much money we are making in the hotel business. For the international business as well, I believe that the overall margins can be in line with what the margins which we are making in India.
Even in developed markets?
Well, right now we are contemplating for Dubai. We are seeing somewhat similar numbers, but again, for the other specific markets, I will have to check back. However, we believe that the margins can exist, specifically given that our operations will continue to happen out of India. And since we are one of the most lean and efficient organizations in India, we should surely fare much, much better than the incumbent players out there. So the idea is to grow out of India and grow our business. Right now, we are not too much worried about the margin part. We know how to squeeze in the margin as what we have done at EasyMart. And that part can be taken on later. Right now, the idea is to get our foothold in most of the markets.
Okay, my next question is a little long term. So we have been reading and hearing a lot about ONDC. So would someone like you be interested to join a platform like ONDC? If yes, why, and how do you think that would impact your business? And if no, why not?
So we are in exploratory stage with the ONDC, team. We have had a couple of meetings with them. There has been no conclusive yes or no from our side so far. We are just trying to understand their technology, their platform, and what kind of services are they providing. It's a platform where we can enlist ourselves both as buyer and supplier. And we are trying to understand more in deeper in understanding. As of now, they are more focused on the grocery shopping or the e-commerce shopping part rather than the air ticketing part. But we will get to know more about it as the time comes. However, the discussions have already begun from our side.
Do you think that in a platform where there will be multiple players, you will stand to gain because you have the cost efficiency as an edge, or do you think
anything which provides eSmart trips visibility helps our organization. Since our pricing are better, our pricing is better compared to our competitors. We have an edge wherever we get more visibility. That's something which we know. Because then there is lesser amount of money which you have to spend on marketing, and everybody is basically standing at the same level. So yes, at the theoretical level, ONDC could help companies like eSmart because it normalizes the cost of marketing, as everybody would be listed on that. But again, it is too early for me to say anything. We are in the exploratory stage with that.
And my very last question is from a 5-year time horizon. What is that aspirational company that you would like to be compared with?
So, I do not think that we have to think of any company as an aspirational company. I believe that at eSmart for the last 14 years, what we have done with very limited amount of capital. On this call, I would like to share a detail which I don't think so we have mentioned before, but it is very evident and open out there, where the first 5 years of running eSmart, we have put in only 15 lakh rupees of capital. The first 5 years, it is a formidable year of eSmart. So we have grown this company bootstrap, truly bootstrap. It's not that we have pumped in our own huge sets of money. Only 15 lakh rupees was put in the first five years of eSmart. And no money from the bank was taken. There's no investors, no PE investors, no VC investors has ever come in at eSmart. So I believe that, at some level we might be aspirational to few entrepreneurs out there. I hope I can say that after doing whatever we have done for the last 14 years. But yes, at the top level, we do see there are some companies like, of course, Zerodha, Zoho, who are again bootstrapped organizations and have built tremendous amount of businesses, are generating humongous amount of PAT. At eSmart, we would like to see ourselves going in that direction. And, we are following the path of doing the right thing for the consumers with the little marketing as we can, so that those consumers mostly come via word of mouth and we are able to retain them for longer duration of time. So yeah, that's the aspiration which we have.
Okay, thanks, gentlemen, and all the best for the rest of the year.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Rahul Dani from Monarch Networth Capital Limited. Please go ahead.
Yeah, good evening, Prashant. Good afternoon, Prashant. Just a couple of questions from my end. Just want to understand what is the status of the Forex business?
Sorry?
What is the status of the Forex business?
Well, I believe we have gotten the license, for the Forex business. The business is yet to start. Ashish, do you have anything to add to that?
No. Yes. So we have applied the license to the RBI and we are waiting.
Okay. And so just want to check, we are seeing increased advertisement from eSmart. So do you expect this percentage to kind of start increasing as we are gaining more market share? And just want to understand what, according to you, our market share would be right now?
So our marketing and sales promotion as a percentage of GBR has not moved. a matter of fact of how much discount the company is offering at that particular quarter. We chose to be a little bit on the conservative side. If you see that our discounting have only gone down for the FY22 entire year, our discount was somewhere around 4.4%, while for quarter 4 of FY22 we reduced it to 3.2%, and for this particular quarter we have again reduced it to 2.6%. So it is also a matter of the fact that what discounts do you choose to give to the consumer. We believe we are very lean and efficient organization, and we care, as much as we care about serving our consumers, we also care about having a very healthy balance sheet. So, it is also a matter of fact of that, and if in particular quarter, if we wish to increase our number dramatically, it can be done by providing more discounts, but we choose to do it in a leaner, efficient way, and we see our business on a long-term basis. So I believe that the market share currently would still be the same, somewhere around 20% on the OTA businesses, on air tickets.
Okay. And so just one last question from my side. Any short-term impact on this SpiceJet ruling from the DGA?
There is no impact as what we see right now. Of course, in due course of this is very recent, so in due course of time we will know. But so far, of course, there has been cancellation, and whichever company is able to handle it pretty well at this moment.
All right, sir. Great. Thank you so much, and all the best.
Thank you. The next question is from the line of Parag D from JM Financial. Please go ahead.
Hello. Hello.
Yes, please go on.
Hello. Hi. Good evening, Prashant. This is Manik Karija from JM Financial, and thank you for the opportunity. I basically had a couple of questions. Number one question was with regards to the airline side is shaping up. If I look at the last few quarters and the way our GDR has extended both on a sequential and year-on-year basis, it appears that we have lost market share. Could you essentially help us understand if that would be the right assessment? The second question would be as to how are you seeing competition evolving, especially given one of the erstwhile players is coming back very strongly, backed by Flipkart. And the third question was a clarification question with regards to the number of hotel nights that you've shared in your presentation. Is there some realignment of the prior period numbers? Because I see a change on your full year FY22 hotel night numbers in the presentation as compared to last quarter. Thank you.
So in regards to your first question, I do not see there is any market share loss. As I said in my answer before, that we have chosen to be a little bit conservative on our discount, which we have been offering from for quarter 3 of FY22. I believe the discount was somewhere around 4.6%. Then we took it down to 3.2%, and now it is at 2.6%. See, when the business is coming fine, when the gross booking revenues are great, when the bookings are happening, why do you want to give too much of discount and lose the profitability? Is what our thought process is. And because of which, some numbers, as we said, that some numbers might not have gone as much as up as you would have expected, because we chose to be on the conservative side on the discounting part. That's the answer number one. The question number 2, which you had, was related to. I'm sorry, could you just repeat your question number 2 again?
So my second question was with regards to the changing competitive intensity in the space, given that players are now.
We have seen n number of competitive cycles come in and go, Manik, as you would have assumed. In fact, honestly speaking, competition intensity has only dried up in the last couple of years. The kind of competition, the kind of discounting which we have seen in the year 2013, 14, 15, it's just not explainable at this particular time, and we have thrived even in those environments. So we believe that to do the business sustainably is the right way to do it. If you burn a lot of money in one particular quarter, and then also you do not see needle moving up dramatically, then the next quarter you basically automatically take the route, which is right route, which is not to burn too much of money. And I believe by us being a listed entity and running business profitably, there is enough pressure on the competition side as well to do business more sustainably and turn profitable someday soon. So I believe that the competition intensity, in fact, I believe that I've read a couple of, messages as well from the company which recently got acquired, that they are actually a lot more focused on the hotel side rather than the flight side. So I do not see huge, I do not see a huge threat coming from the company which was recently acquired. And the third question which you asked is related to the hotel business. Yes, we have added our 3 hotel numbers as well into the business. This is the consolidated number, and that is why the numbers might have changed as the base from the last quarter.
Just one quick clarification on the last one. So, addition of 3 was YOLO, while YOLO would not be part of the hotel business, but the 3 business would have come in the second half of the year. But I even see the first quarter FY21 hotel numbers being changed. So what would probably explain that?
Sorry, your voice is not very clear, Manik. I could not hear your question much. Ashishji, if you could make that question, what was the question? Maybe you can answer.
Yeah, voice is breaking. After they are asking about hotel. Can you repeat the question?
Sure, Prashant, I'll take a stab again in a bit. You could hear me.
Sorry to interrupt, sir. We're not able to hear you. Mr. Parag, we're not able to hear you.
I hope you can hear me now?
Better. Thank you.
Hello?
Yes,
Go ahead, Mr. Parag.
Yes.
Hello?
Yes, please go on.
Hello?
Mr. Parag, we're able to hear you. Please go ahead with your question.
Yeah. So my apology. Prashant, my question was with regards to the hotel's volume. 3 would have come in second half the year, but I see even first quarter hotel numbers seeing a change in the first quarter FY21 numbers. So what would explain that? And the second question was with regards to the segmental profitability, and which was also asked by one of the other participants. You guys have reported the segment revenues and profitability across air passage and the other businesses. When one sees at the segmental profitability, it appears that the segmental profitability is same across all the segments. So what would explain that? Thank you.
Ashishji, can you answer that question?
Sure. For hotel of Q1, we have to see what the difference they are talking about. That is, right now I'm not able to comment on that.
And Ashishji, about the segmental property, have we reported
we reported segmental profit is the results. So there is an improvement this quarter in hotel packages. There is 7 crore profit in the current quarter, as against 27 lakh loss in the corresponding last year quarter. So there is an improvement in hotel package revenue.
Okay. But what would explain the fact that if the margins are 47.5% across each of the segments? That is something.
The margin increased because of the SP basically. So this time there is a SP number added in the hotel packages. So,
no, I get that. I was just saying that the margins across air package, hotels packages, and other services shows up at 47.5% across each of the 3 segments in this current quarter. That was the reason why I asked that question. Thank you.
So basically, we do not segment our employees, and that is why I do not think that it would be a correct thing for us to say that the EBITDA is exactly the same for all of them. It's just that we have reported a combined EBIT margin.
Sure. Thank you, and all the best in the future.
Thank you.
Thank you. The next question is from the line of Santosh Sinha from Axis Capital. Please go ahead.
Thank you. Thanks for taking the question. My question is regarding the contingent liability that the company has. Actually, when it comes to litigation with Airberth Travel and Tours, and also with the income tax demand from the income tax department, is there any update on these two litigations?
Ashishji?
As far as Airberth is concerned, there is no development, and there is a status quo. And as far as income tax demand, it is under appellate authority, so same status.
Okay, thank you. That was helpful. Thanks a lot.
Thank you. The next question is on the line of Praveen Sahai from Edelweiss Wealth. Please go ahead.
Just a clarification, as you had said that the domestic and international bifurcation of 70 and 30% is in terms of volume?
Yes. No, in terms of value.
GBR.
Yeah, in terms of value.
Okay, thank you. That's it. Thank you.
Thank you. The next question is on the line of Jins Varghese from Tafsaya Capital. Please go ahead.
Yeah, just wanted to know your outlook for, your airline volume growth for the next 3 years. I mean, or just I want to rephrase it. Suppose if the airline industry grows by, say, 25% over the next 3 years, can you grow by 2x or you can grow much higher than that?
So, I will first state what is anticipated for the airline industry and then probably comment on what should we expect internally. See, over the period, right now, I've read in a couple of research reports, there are about 710 aircrafts which are used in India. And every year in India, we are expecting to add between 110 to 120 new airplanes for domestic purposes. This would mean that over the period of next 10 years, a decade, the market should go up by 2 times and become 3 times the size of the market which it is right now. So at overall basis, we should expect a CAGR growth of around 14 to 15% on annual basis. So that is the anticipation at the market level. At EaseMyTrip, since we are gaining the market share and since we are chasing, I believe that we should be able to grow at least 2x the speed of the market and maintain that run rate for the next couple of 2 to 3 years. That should be our expectation.
Okay. And one more, sorry to add that. Where do you see this EBITDA margin settling in for the airline business? I can expect around 50% or would it continue to deteriorate going forward?
Right now it is at 50%. At the peak of it was somewhere around 60%. I anticipate this number to settle somewhere in the middle.
So this will be more or less similar going forward.
Is there any question?
Yeah, I'm done. Thank you.
Okay.
Thank you. The next question is on the line of Anshuman from YCG. Please go ahead.
Hi, am I audible?
Yes.
Yeah. Hi, Prashant. So you mentioned in an earlier interview that the company grew at close to 50% CAGR between FY16 to FY20. So what is your outlook on the growth for the next 5 years, even the decade? And I also had another question. So you mentioned that airlines are the bread and butter of the company. Where do you see the revenue mix going forward the next 3 to 5 years? Yeah, that's me.
So to answer your question number 1, yes, the company grew at CAGR basis of 57% in the past. The pandemic basically, of course, halted the business dramatically. Now the business is actually back on track. If you can see that our GBR for this quarter, if you take an annualized approach on the GBR which we have attained in this particular quarter, on the annualized basis, we are anticipating our GBR to come somewhere around 6,500 to 7,000 crores for FY23, provided there are no huge disruptions related to COVID or any other anomalies. So at that, if we take that as a number, we are anticipating our business to grow by 90% compared to FY22. So that should give you some hint on where we are seeing to progress. And
Right.
on the mix side, the mix can change pretty dramatically. Our Middle East business is growing, and we anticipate our other operations, our other country operations also to start in the next in next 4 to 6 months. So the business mix can change pretty dramatically. Our endeavor is to keep adding newer business verticals to EasyMart, which are either at break-even or profitable stage. So, it would be very hard for me to comment, for the outlook of 3 to 5 years. However, our endeavor remains the same, which is to become a global player and not just and become a travel ecosystem rather than just being a travel platform.
Right. You, in an earlier interview, mentioned about how when people are booking on websites, they're comparing prices, but when they're on your app, they're not essentially comparing prices, which I found to be a great point. So I'm just wondering, what's the current split between the website and the app bookings, and how is it progressing forward? Like, what does it look like in the future? What's your outlook?
So basically, whether it's an app or whether it's a PW, PW is also a progressive web app where people can use our mobile website as a substitute of the app. The business is growing more on the app side rather than on the desktop side. In fact, the desktop numbers are almost 1/4 of what our total numbers are. 1/4 or 1/5 of our total numbers are. Mobile website and app constitutes for the most of the booking. And this is one superpower which I believe the current organizations, like EasyMart has, which is that the more and more we get deeply penetrated on the app side, the better it is for the company. Where, you become people's default choice to go to EasyMart app and just make the booking. As you already know that EasyMart gives an option to not charge convenience fee. It becomes a no-brainer for our consumers to keep reusing EasyMart over the period of time.
Right. I have one last question. So you made a slew of acquisitions over the past year in the hotel space. How soon do you believe they'll start paying for themselves for the company?
Our Sea Hotel is already profitable. It's doing well. And however, the endeavor is not to focus on the profitability, but to focus on the growth on that side. So there are a lot of targets which we have kept for the company. And the company is very well positioned to capitalize the brand name which they have created over the last 10 years of their operation and the know-how. And use that to grow the organization to become a 200 hotel organization in the next 5 years.
Right. I have just one last question. In terms of expanding to new markets, what are the inputs that are required to create a foothold in a new country in terms of capex and strategy?
So strategy is basically to partner with the low-cost airlines, which we may not have partnered for that particular country. Most of the other airlines are available on the GDS, but low-cost airlines is something which we have to partner, and also we have to partner with the bank and the local payment gateway provider so that we can take money in their currency. These are the two big requirements to start the business. Of course, we have to form a company. But besides that, these are the two big requirements. So they are not huge. They are not hugely capex-related business. The money is required to do the advertisement in those countries. And at EasyMart, we wish to grow our business at break-even or profitable stage. So whatever monies are required, it is required for sales and marketing promotion. And that money can certainly be provided by EasyMart.
Right. Thank you so much for answering those questions.
Thank you. The next question is from the line of Aditya Krishna, an individual investor. Please go ahead.
Hi, Prashant, can you hear me?
Yes.
Yeah, I'm an undergraduate student, very early investor of EasyMart. My question is regarding cash on books of EaseMyTrip. Look, I've been very impressed with the cash that you guys sit on, and of late you have been using the cash for a slew of acquisitions which you are undergoing, maybe YOLO Bus or Spree. But now my real question is, as you enter into global markets, I mean that too competitive markets like Dubai, probably Europe and New Zealand now, what is going to be the cash deploying strategy to acquire? Is it going to be to acquire international companies to generate further cash, or is it going to be to home grow the business from scratch outside?
So the answer is in twofold. Firstly, we believe that we are very well poised to grow organically in these countries. The EaseMyTrip grew very patiently in India. We did not rush up to reach where we have. We grew very patiently. We grew in a correct manner, and we wish to exhibit the same ideology even outside, where we would want to grow at unit level profitability in other parts of the world. And given the current situation of the company, it would be far easier to do it now rather than to do it 10 years ago, where we were not a brand at that time. So now having the capital and having the branding, having the technology, it is much easier task than what it was done earlier, 10-15 years ago by EaseMyTrip. So the idea is to grow, to surely grow organically. But if there is an opportunity which is presented to EaseMyTrip where an acquisition could be made, but the DNA of the company has to match it. If the company which is presented to EaseMyTrip to be acquired is not running profitably, does not have a very strong unit economics, we will shy away from that company and rather grow by our own. But if there are some companies which we are contemplating outside India, where we believe that the unit economics and everything matches, we may look at those acquisitions as an opportunity.
Just to add up to that, just in just some of the previous questions, you answered saying you would want to focus on growth in these emerging markets or outside, or global markets to that say. But now you say that you want to grow organically, get that, but how will you grow organically and fast, right? I mean, that's my real question.
So, it's a fair question, to be honest. We are also figuring it out ourselves at the moment. We have started our Middle East operation only 3-4 months ago. The results are very encouraging, where the same kind of structure which we have followed in EaseMyTrip, which is not having any guarantee, is the kind of offering which we are offering in the other countries. And we wish to continue on that back. There might be some money which we will utilize to do marketing bit in those countries, but again, the idea would be to grow in a sensible way rather than burn the money in marketing in these geographies. So our approach will remain the same, which is to grow patiently. If things happen organically in a great sense, great. Otherwise, the fundamentals of EaseMyTrip will remain the same.
One last thing, because we are, as a company, are entering into global markets, and that's probably will be a massive revenue stream going ahead. What will be our edge? Are we going to go with the same, that we are no convenience fee, probably the best platform to use out there, and we're customer centric, etc., or we're going to have developed some new edge in global markets which will convince users to, beat other players and come to EaseMyTrip to book everything?
No, I think you have said it rightly. Whatever the strength this organization has, we will continue to use those strengths. Not to say that we don't want to innovate. Where, depending on the country, depending on the geography, whatever is the requirement, we will try to suit ourselves. We will try to mold ourselves to those geographies to serve those people better. However, at the core, we believe that this business is very simple at the level where if you provide better service and better price to the consumers, sooner or later they will jump to start using you.
Yes.
And that core remains the same whether it is India or UAE or US. You just have to focus on providing great service at a great price to the consumers, and I believe that EaseMyTrip is very well suitable to do both in any geography we enter.
Thank you very much, Prashant. Pleasure speaking to you. Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Prashant Pitti for his closing comments.
Well, thank you. To conclude, I would like to highlight that with huge runway for growth, increasing wallet share from existing customers for hotel and holiday segment, addition of new customers, and operating efficiencies and leverage play, we believe we are well positioned to capitalize on the growth opportunities and increase profitability in the future. Well, thank you everyone for joining us. I hope we have been able to answer all your queries. In case if you require any further clarification, please feel free to reach out to us or Orient Capital, our investor relationship partner. Thank you everyone for joining us on the call.
Thank you. Ladies and gentlemen, on behalf of Easy Trip Planners Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.